The market is bracing for significant shifts, but amidst the volatility, one microcap biotech is poised for an explosive move. We're talking about Spero Therapeutics, ticker SPRO, and its high-stakes FDA decision on June 18th. This is a definitive binary winner candidate, offering an asymmetric risk-reward profile for those ready to navigate extreme volatility. The market environment is tense. A neutral to bearish stance reflects widespread derisking. Sticky inflation is a primary concern, with CPI expected to top 4%. Brent crude prices are surging, driving energy inflation. The yield curve has seen a shock, with the 10-year Treasury now above 4.5%. A strong jobs report reinforced the higher-for-longer rate narrative. GDP growth remains resilient, showing a physical economy expansion. But service inflation persists as a sticky bottleneck. The Treasury curve is finally upward sloping, removing a key drag. Fed Chair Kevin Warsh faces a hawkish debut with markets pricing an October rate hike. Market leadership is narrowing, with mega-cap growth facing capitulation. We're seeing a rotation towards defensive healthcare and industrials. The VIX has spiked to 18.5, signaling elevated volatility. Less than 40% of Nasdaq components are above their 200-day moving average. The SP 500 is currently testing its 20-day MOA. The CPI release on June 10th is a primary risk vector. Any core print above 0.4% could trigger immediate yield spikes. This market is in a catalyst-heavy de-risking phase. Opportunities demand precision, focusing on companies with clear, near-term catalysts. Let's dive into Spero Therapeutics, ticker SPRO, a true binary winner candidate. This company is pioneering the fight against multi-drug-resistant bacterial infections. Their lead asset, tebipenem HBr, is partnered with pharmaceutical giant GSK. This partnership strategically offloads commercialization risk to GSK's. Spero effectively transformed into a lean, IP-heavy entity. The key moat here is its first-in-class potential. If approved, tebipenem HBr will be the only oral carbapenem in the U.S. market. This creates a monopoly for transitioning complex urinary tract infection patients from IV to at-home oral care. Management, led by CEO Seth Ames, successfully executed a GSK pivot. This move saved the company after an initial regulatory setback. Their Phase 3 Pivot-PO trial was a landmark success, meeting all endpoints. It even allowed for early termination due to overwhelming efficacy. A successful June 18th FDA approval would unlock up to $150 million in milestones. This is non-dilutive capital, layered on top of future, tiered double-digit royalties. SPRO is exhibiting a classic volatility squeeze ahead of its June 18th catalyst. The stock has been trending upward from its 2025 lows. It found a crucial consolidation base near the $2.80 mark. SPRO is currently trading above its 50-day moving average. We're seeing clear institutional footprints in the volume profile. Accumulation volume has increased significantly since the NDA resubmission. Key support for the stock sits around $2.50. Resistance is observed at $3.25. The Relative Strength Index, or RSI, is at 56, indicating a neutral to bullish stance. This suggests the market is waiting for the catalyst, not chasing momentum. SPRO's beta is 1.85, meaning it's extremely sensitive to regulatory news. We could see potential double-digit daily swings in June. For high-risk accounts, long positions are favored, with a stop-loss set at 2.20 cents. Spero Therapeutics is a microcap with a market capitalization of approximately $185 million. Revenue growth is nonlinear, driven by milestone timing from the GSK partnership. 2026 is projected to be a record year pending the FDA approval. Operating margins have dramatically improved. This follows a 40% headcount reduction and the strategic shift to the GSK-led model. The company maintains a strong cash position of approximately $56.1 million as of May 2026. Management estimates sufficient liquidity to fund operations into 2028. This provides a rare safety net for a microcap biotech, even without immediate milestone payments. Spero has minimal long-term debt, reflecting a clean capital structure post-restructuring. Free cash flow yield is currently negative, as capital is focused on supporting GSK's launch. It also funds the advancement of their internal SPRO 720 pipeline. On a forward price-to-sales basis, SPRO trades at roughly 1.2 times 27 estimated royalties. This appears deeply undervalued when considering the potential $150 million in near-term cash milestones. Our sum of the parts valuation pegs the tebipenem HBr royalty stream and milestone package at over $450 million. This implies a compelling target price of $9.50. Our conviction level on SPRO is high, specifically for those with an appetite for high-risk opportunities. This is the definitive binary winner candidate for June 2026. The technical setup is coiled for a breakout. The clinical data supporting tebipenem HBr is robust and compelling. With GSK handling the heavy lifting on commercialization, execution risk is minimized. The potential $150 million in milestones dramatically skews the risk-reward profile to the upside. We strongly recommend reweighting SPRO into conviction buy status. This should be done ahead of the critical June 18th PDUFA date. It's crucial to understand SPRO carries an extreme risk profile. This is a binary regulatory event, meaning outcomes are largely all or nothing. The primary bear case involves a second FDA Complete Response Letter, or CRL. This could be due to safety concerns or other issues, which would be a significant setback. Such an event would shorten the company's cash runway, potentially into 2027. In the worst-case scenario, GSK could terminate the partnership. Given the high beta of 1.85, expect double-digit price swings based on news flow. Investors should prepare for significant volatility surrounding the June 18th decision. SPRO is not for the faint of heart, but for investors willing to embrace little extreme risk. The potential reward is substantial. With a unique market position, a robust clinical profile, and a major pharmaceutical partner, Spero Therapeutics presents a compelling high-conviction opportunity in a de-risking market. The clock is ticking towards June 18. Will SPRO unlock its full potential? We will be watching closely. Do not forget to like, subscribe, and hit that notification bell for more insights into these high-stakes market plays.